How is it hanging? What's up? What's up? What's up? All right. Let's just jump on into the disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FinRecific. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's my position disclosure. I got out of Apple and Nvidia today. Everything else is the same. Cool. Let's jump on in and look at these charts. All right, what did the market do today? How did we close? SPY's up 0.84%. Q's up 1.4%. Ding, ding, ding. All-time highs. All-time highs for the NASDAQ. Impressive. And the IWM managed to finish up 0.5%. Managed to close up above 190, but was most certainly a struggle, which wasn't totally unexpected once we saw the TLT drop after the numbers came out at 8:30 this morning. But yeah, let's hop in. So opening price action this morning, I got the 5-minute chart up of the SPYs. It was like similar but in reverse to yesterday's opening price action, right? Yesterday we had a pretty big gap down. We spent a lot of time in yesterday's afternoon meeting talking about small time frame extension that comes from gaps, how it gets satisfied, and then based on questions that some of you guys had, talking about how that 5-minute extension can become 15-minute extension, different times of the days, and how that matters. So yesterday with the large gap down, we consolidated that through time, which is technically bearish, but it's within the confines of a bullish daily chart. Today, we gapped up pretty significantly, and we corrected that through time and price, meaning we both went sideways, which allows the ADMA to catch up, and we pulled back, which allows the price to move down to the ADMA. Once the market kind of caught up and was no longer extended here by 10 a.m. or so, we tried to boost up a little bit. Didn't get dramatic follow through. We had some 15-minute extension that then we were talking about. Kind of turned into choppy range action. Breaking lows here and kind of filling the gap in the SPYs certainly did not have us looking good, and that was at the same time as the IWM, which was relatively weak all day, was really not looking good and almost was starting to retest that important 188 zone support that we spent a lot of time talking about yesterday. And then lo and behold, we had our afternoon rally that was so commonplace, I think, for most of 2022. Where just the zero DTE traders are, monetizing their positions into the end of the day, which we've seen just create this consistent choppy morning action or weak morning action, and then kind of strong last couple hours into the close. And today was no different. Just when you're probably ready to throw in the towel on the intraday price action of the market, we seem to V-bottom somewhat in the middle of the day, catch a bid, and just grind up and have a strong close. Again, this was pretty commonplace price action that we saw a lot of last year. Not necessarily something you see every day, but it's become pretty commonplace. So really strong close. At the end of the day here, let's go over to the market. So we wanted to see yesterday if the kind of pivot low that was created and the fact that we were able to close above momentum support in the SPYs and Qs and broad daily support in the IWM, if that could be a pivot point that could lead to follow through. And what we also discussed in yesterday's afternoon meeting is that those, being able to capture through small time frame trades, at least initially, big time frame pivots can be some of the most profitable trades that are out there. So, if you've still got some IWM long from yesterday versus that 188 area versus the opening low that like we had discussed, you got some follow through today. You got even better follow through if you were involved in the QQQ kind of, I almost called it a capitulation low, wouldn't really be the right term, but the smaller time frame bottom that we had called out so well at 10 a.m. for the Qs and for Meta and Amazon and Google and I think Microsoft, all those names. even better. You know, we talked about this yesterday, but now you can see the even further follow through. You could be long the Qs still from, I don't know where we called it out, 403.20 or something like that, you know, for 30 cents worth of risk, and now you are over $10 in the money on that smaller percentage of your position that you have remaining to try to be able to capture, you know, the continuation on the daily chart. You're $10 plus in the money on it at this point. Or Amazon, you're, you know, $3-4 in the money on. Or Meta off that low, even better, right? I think we called it out even below 360. You could be, you know, $17 in the money on Meta by this point. I mean, that's just the type of follow through that we want. Microsoft is another example. And then you don't even know where these things are going to work their way up on the daily chart. The Qs made all-time highs today. They closed at all-time highs, all-time high intraday, all-time high close. So who can tell me what the next resistance level is in the NASDAQ based on technical chart analysis looking backwards? There is none. There is none. This is a level that the market has never seen before for the NASDAQ. So who knows where we can trend up to. You know, markets that are making all-time highs tend to continue. It's also kind of a thing, right? There's no one that's been out of the money in the NASDAQ that's looking to sell their stock as soon as they get back to break even anymore. So who knows, you know, next thing you know, we could be at 450 in the Qs just with a beautiful uptrend that, you know, maybe grinds up for the next 6 months or something, and you're at 450 in the Qs and you still have that stock from 403 because you're just, you know, following trailing rules for reward maximization and trend continuation. Like those are definitely the trades that we want. So Q's looking phenomenal. And this also, the one difference off the January 5th low was that the SPYs made that low and then made a new high, but the Qs didn't actually make a new high, so now they have. So the Qs are also really confirming this and now this as pivot lows within the confines of our uptrend. The SPYs are still in a pattern of higher highs and higher lows, though have not, at least not yet, made new highs. You need the SPYs to get above 478. It's a really big level. 478 is the equivalent of QQQ 411, which had been big resistance. We talked about it in the morning meeting today, tested multiple times. That was the big thing we were trying to see off the open. I'm remembering things as I speak. That's the big thing that we wanted to see off the open with the Qs. A really big gap up, but can we get above and hold above 411? Let's see what this market looks like after small time frame equilibrium catches up. And it looked good. Certainly tricky with the break of the low here in this afternoon session, which is what I was talking about earlier, where that's become so commonplace, I think, in this year, and it's been frustrating for a lot of momentum style traders. But you know, at the end of the day here, not bad at all for the NASDAQ, even if the intraday buying was a little bit tricky because you probably got shaken out midday. And then finally, the IWM was really difficult and disappointing. And honestly, if you ask my opinion, this was another day. How'd the RSP do versus the SPY? Yeah, SPY is up 0.9% and RSP is up 0.17%. It really is another day here where leadership was very poor, and that stinks. I remember at one point today looking at the NASDAQ up like 0.8, 0.9%, looking at my portfolio of 16, 18 stocks and seeing that more than half of them were negative with the NASDAQ up like 1%. And that can certainly be frustrating. But the RSP was negative a lot today. It barely closed positive. The IWM was negative a bunch today. Did manage to also close positive, but without a doubt, the average stock that's out there is lagging the broader indices, the SPYs, and especially the Qs. So I don't know. For me, at certain points during the day today, I found that a little bit frustrating that I wasn't getting more follow through from some of the stocks that I'm looking at and that I'm trading, given what the market's doing. But again, we can't be surprised when the TLT's still down. The NASDAQ doesn't care about interest rates. We've kind of learned that, right? And we understand why. It's because Apple and Microsoft are locked into 30, 40-year debt at 1%. They're in a great position for a high interest rate environment, but the IWM is going to be more impacted by interest rates moving back up, and there has been already this year, and probably still continues to, we still need to have kind of some re-rating of the expectations of Fed cuts this year, which applies pressure onto the TLT, which applies pressure onto the IWM. So if anything, the fact that the IWM closed above 190 and was able to close green, given that interest rates still moved higher today in a somewhat meaningful way. I mean, TLT is down 0.9%. You probably should be happy with that. And that's also been one of the things that we've discussed. I think Goldman had a note out on it. Can the market hold in, and potentially it can, even as the market reprices expectations of the amount of Fed cuts that we're going to be receiving through this year. So I think given TLT weakness and the fact that the dollar was up a little bit again today, just a little bit, it's impressive that the market was able to give continuation. It's impressive that the RSP and the IWM were able to be green at all. So I guess I shouldn't complain that much that some of the names I'm involved in couldn't really catch bids and give upside continuation. And you had banks not participating for most of the day today. I know that they caught that afternoon rally also and managed to close green. You had energy. XLE almost seemed like it gave some sort of capitulation action at 11 o'clock this morning, at 11:05, after the oil number was released. That was a really big downtick on volume. Look at what Chevron did. Look at the volume on this Chevron on this candle here. 1.2 million shares. That's a lot. Just eyeballing it, it usually does, I don't know, 70,000 shares probably in an average 5-minute bar. Did 1.2 million on that bar with this, and this downside tail is 100% real. I had a bid sitting at 140 that actually got filled, which was nice. And then snapped back up and didn't close on those lows. So maybe it almost seemed like some sort of capitulation type of action for some of these XLE names, where you could be looking at these things for a bounce trade. They do need to recapture the support that they broke down through, though. You need this XLE to get back above $81, but I thought that was interesting. But again, just a lot of things not participating today. XBI biotech, which is also pretty interest rate sensitive, has been really strong for a little while now. This is another one that just did not want to participate with the market today. Closed down 1.6%. So same deal. It seemed like leadership was somewhat scarce, but what led certainly is able to lead. It really, I guess, started with Taiwan Semiconductors this morning, and the news that came out of them. The earnings report up 10% today, looked really solid. Helped give AMD a boost in the beginning of the day, and Nvidia a boost in the beginning of the day. You had the Apple upgrade this morning. Apple just being such a large weighting of the indices. Apple broke through some serious resistance today, got it back above the moving averages, got into the gap. So, if you got semiconductors moving higher and you got Apple moving higher, does it really matter what the rest of the market does, at least for the SPYs and the Qs? Of course, the answer to that is yes, and I'm being a little bit melodramatic, but it's just such a big part of the market that, you can easily see the Qs being up. What did I say they're up? 1.5%, and the RSP being up 0.16%. So I think that's pretty much it. I'm trying to remember if I had anything else specific from this morning. The big thing I think from this morning was just looking for continuation. We talked about big picture, being able to be long a lot of these big cap tech stocks in particular, like versus yesterday's low, if you're big picture enough. Great looking tails down there for Meta, for Microsoft, plus those names got upgrades and price target increases, but even without them, Amazon, Google, they were all there. We mentioned like PanW, which was a little bit tricky today because that got upgraded, or CrowdStrike, which got upgraded. ZS got the buy initiation that was on the radar, but a little bit tricky. S as well. They sold everything in the beginning of the day, though, that wasn't big cap tech. So like that S and ZS were really difficult. Anything that was growth got hit real hard off the open. I remember, I've been trading this U. Look at this nasty candle in this Unity. They ripped this thing. I guess there was a block sale. They ripped this thing right into the open. I actually got a sale. I sold some at 35.24. High of the day's 35.26 right at the open, so that was a good sale. And then as I do, I sold some above, at 35 and above 35, so I get this pullback to below 34, and I start, buying back some stock. Very common for how I trade. Like, okay, I was able to sell some up there. Let me buy a little bit back. Let me try to create the cash flow. And I was like, couldn't believe the way that they sold this thing down from that high. This is probably the most dramatic one that you can find. But type up almost any growth name, and you'll see a solid, depending on the name that you're looking at, 1.5 to 2.5% gap up. This was more like a 6% gap up, I think. That within 10 minutes was flat to negative on the day. Just type up almost any of them. Palantir, here's another example of it. Chewy, here's another example of it. I mean, these are just names that I'm in, so it's easy for me to type them up. Or even look at Pins, right? Pins got upgraded. So this thing was extra strong on this upgrade. They didn't care, sold the heck out of it this morning. Or S and ZS, which were on our list today. They got strong buy initiations. Market didn't care. Growth names were just getting sold very heavily off the open as the TLT was moving down, as the IWM was moving down. They just wrecked all those names out there real hard, real fast this morning. And it was interesting price action because at the same time, if you're typing up Apple, it's just up and away. So that's all I got. It's finally a beautiful day here. I got a lot of shoveling to do. We were just in like a storm cycle here for like 2 weeks. It was kind of crazy. Finally a beautiful day, like 25 degrees outside, I think, with the sun out. That's t-shirt weather. So after the afternoon meeting, you can find me in a t-shirt shoveling some snow. Cool. Questions. First from Christian. This afternoon, I was staring at the market rally trying to find a setup to participate. I ended up not trading it mainly because of the time of the day, but I was wondering if you comment on a couple of things I saw on my way up. Would you have considered buying the shooter and the Qs at 150 or the continuation hammer and the spies at 245? Probably not. Maybe. So, you watched the movie, decided not to participate. I honestly don't blame you. I struggle personally with these afternoon rallies. The way that I've adjusted to it with my own trading over the course of the last couple of years is to be less aggressive in the mornings than I used to be, to focus a little bit more on kind of building into positions with wider outs, wider stop losses than I would have probably more traditionally with my trading, so I can build into things and then I still have the positions on for when the afternoon rallies like that actually occur. If I'm flat or looking for new positions and then you get that, random, I don't want to call it random, it's probably the wrong term, but you know what I mean, that V bottom that just comes in between 12:30 and 2 o'clock that just leads to this afternoon rally. I struggle with that personally as far as putting new trades on and being able to capture it with anything new. I've never been a very strong midday or early afternoon trader. As a matter of fact, my entire career I've worked towards making sure that I'm not over trading in the midday trading session because traditionally, and this is definitely still true to at least some degree, even though the market environment has changed, it's the worst time of the day to trade. Is in the midday. I've got plenty of statistical data that just shows that for us as a team of traders, by far our worst P&L time of the day is when we're looking to do anything in that mid portion of the day. So I've just trained myself by looking at my own P&L and looking at the P&L of the team to say, hey, I shouldn't be doing a whole lot midday. And I don't like putting on trades in the late afternoon because I just don't feel like I have enough time cushion to let the trades really breathe properly and work properly for them to potentially become swing trades. So again, I don't blame you for that. Now, both of the types of trades that you're mentioning, a shooter there, which I don't like, I really don't like inside inside candles midday within ranges, especially the continuation hammer at 245, those are trend continuation setups. And the fact of the matter is, we're trending higher in the afternoon session. And you can be looking for trend continuation setups as long as we're trending higher, and that's exactly what we're doing. Again, it's a trade that I struggle for. I'm almost not even looking for it, to be honest with you, midday. I mean, I will if things are really heating up or there's a news event or something like that. But like, if I could find a way to, I don't know, take a piece of paper or something and just put it over this first half of the day, the chart, and then just like, just as an exercise, see something in here where like this. Imagine that this is the first bar of the day here at 1:30 instead of it being the actual 1:30 candle, and this is where my day is starting. I love those setups then. I love them. I like these inside fives if this is still in the first half hour of the day. I like the hammer continuation candle that you called for. If we do the same exercise with the Qs, if we said that the 1:30 is the first candle of the day, none of this exists. I like this bull flag continuation, 2 inside bars in a row, bull flag shooter, same thing. For continuation, that's the stuff that I really am trained to look for, but I'm looking for it in the beginning of the day. That's when I really want those trades. I find them much more difficult here. It's a crappy time of the day to trade. It's 1:45. These 2 inside bars are within the consolidation of the 12 to 1 p.m. consolidation. Traditionally, this is not a good trading setup. Again, maybe that's changed or changing because of the afternoon rallies that we get, and if you are able to recognize that the market is in an uptrend, even if it's a smaller time frame uptrend in the afternoon, and that's when we tend to be strong anyway, then you can look for trend continuation setups, and that's exactly what those are. So, hope that helps. Just being totally honest with you, those are trades you can take, but I would start by taking them small and keeping track of the statistics and making sure that they're actually working out for you. Because traditionally, I feel really confident that the setup here, especially, maybe a little bit less so the SPY setup, but the setup here, especially in the Qs, is probably not a consistently profitable trade over a 10-year look back. But if you did it maybe over a 1.5 year look back, maybe it is. So, thanks, Christian. From David B. Question on stops. Do you have different stop for add-on trades or same as the main position? And how often do you calculate total dollar risk to your portfolio, or is it kind of more of a running number that you keep in your head? Sure. So if I'm adding on the way up as trades work for me, which I don't do too often, then I treat it like a totally separate trade with a totally separate stop. If I'm adding against me as a trade moves against me or averaging down in a position, I'm doing that when I already had that game plan to do that extra buying with that stop loss in place. So that risk was already calculated. So pretty straightforward answer. I'll just repeat it. If I'm adding like on the way up, which again I don't do very often, I treat that as a totally separate trade. It's a trade outside of the purview of the original trade that I'm involved in. It gets its own stop. It gets its own risk. I treat them totally separate actually from the stock that I already have on in that stock. They might as well be different companies, even if it's the same name. They're two totally different trades. If I'm adding as the thing moves against me, which I do, that was already built into the game plan. That's already knowing where I'm planning on taking my loss. I already know how much I'm planning on risking, and knowing that I was adding it, planning to add at those prices if the name were to go against me, and it's built into the risk calculation already. So hope that helps. David B, I appreciate the question. Switching over to Dave S. Any thoughts on huge laggards like SoFi or ARK? Yeah, we're just talking about how weak growth is. Is ARK red today? Because I would not be surprised at all. Yeah, ARK's down 0.5%. Again, this just goes to show you, I think, a lot of what I was talking about earlier. Biotech weak, ARK weak, XLE weak, financials closed green, but they were weak a lot throughout the day. A lot of the interest rate sensitive stuff is being weak, and the less interest sensitive rate things like the Magnificent Seven are just don't care. So do I have any thoughts on them? It's like I said before. I don't know. I can't be surprised because these are the most interest rate sensitive things, and the market needs to re-rate the amount of cuts that they were planning on doing as time goes by. At a certain point, though, the market will get a little bit closer, I think, to being realistic on how many cuts there are going to be, and then it's a question of, do they oversell these names by that point? Are they extended the downside at that point? And then by then, there is potentially a good, trading opportunity. Josh wants to know if there's anything out on coin. Not that I see, but I'm not the news guy. Mara's trading down after hours also. Riot's not really. This Mara's down 15 cents or whatever after hours. From Jerry C. Further question on stops. How do you manage stop loss amount since stocks behave so differently, and particularly high-priced stocks like NVIDIA compared to Uber? In other words, you can't have a $10 stop loss on NVIDIA or you will get stopped out nearly 100% of the time. Sure. So, every trade that you take will have a natural technical stop loss. And as a matter of fact, if we really want to go back to our basics, the definition of a trade, my definition of a trade, is something with a technical reason and a technical out. A technical reason, why am I getting involved? Why do I think I can make money? And a technical out, aka a stop loss. Sometimes you can find expensive stocks that have very tight technical stop losses. Inherently, it means there's a higher probability, I guess, of getting shaken out. But you have to trade the trade correctly for it. So most likely, and I'm not coming up with any great examples right now, but if you're looking at a bull flag setup in Uber versus NVIDIA, a bull flag has an appropriate technical stop loss for it. Most likely because NVIDIA is a more expensive name, it's just going to be much wider spacing-wise, right, than Uber is. Therefore, you have to take less tier size for the same dollar risk. So if your Uber stop is 10 cents and your NVIDIA stop is $1 and you wanted to risk $100, in Uber you're buying 1,000 shares, and NVIDIA you're buying 100 shares, right? So it's really as simple as that, but you just want to make sure that you're using the right stop loss based on the technical setup that you're actually looking at, and then you're taking the right tier size. It may mean that you shouldn't trade NVIDIA, because it may mean that this setup is $5 worth of spacing risk, and that's just way too much spacing risk for you to, based on your account size, to have an appropriate trade in it, and that's fine. I know I traded a lot of NVIDIA recently, and I will look to actually get back in on it on a dip. That was a good trade for me. I don't trade NVIDIA very often. The stock's too expensive. I don't like stocks that are $500. My sweet spot is stocks really between 10 and 150. I find that the spacing risk tends to be controllable for those names. I like them to be liquid. Ideally, I like them to do at least 1 million shares of volume a day. I don't like trading Adobe. I don't really. NVIDIA trades so much volume that there's a lot of liquidity there, but the spreads aren't too bad. But all the same, I don't love it. I trade a good bit of Tesla, but even Tesla's $200 stock. Not really for me. I think I communicated like Burlington the other day, and while I was looking at it in the morning meeting, I specifically said, if it breaks the resistance level, I'm probably not going to trade it, because it's a $200 stock, and I very sparingly trade names that are this expensive. So, yeah, just trade the trade, and if it's not appropriate for you, don't take the trade, and make sure you got the appropriate, stop loss in. And I prefer the cheaper names because you can have a lot more size. More size for the same dollar risk means that there's a lot more that you can do from a game planning perspective. I would much rather have 10,000 shares in a stock than 1,000 shares in a stock. I'd much rather have 1,000 shares in a stock than 100 shares of a stock. Just because there becomes so much more that I can do. But if I'm trading these expensive names, then it good luck having 10,000 shares in Nvidia. I had a good trade, but I can tell you I certainly didn't have 10,000 shares of it. Yep. Thanks for the question. Over on YouTube from Apex Joy, do you think there could be a short squeeze on save? It is a little dramatic. Let's take a look at it. So I don't know what the short float is. That'd be the first thing that you want to know. I'm staying away from this thing. It looked like Save was working its way towards bankruptcy prior to the JetBlue stuff happening. Now with that falling apart, it really looks like the thing is working its way towards bankruptcy. I know that the CEO or somebody came out today and said that they're going to focus on, cost-cutting measures or whatever to try to keep the company viable. I don't know. We have seen on a few occasions as well, like Hertz comes to mind, but it certainly wasn't the only one. Company declare bankruptcy and then have a massive short squeeze after. Cameron here saying it's 17.25% short float per Finviz for Save. Can it have a short float? Yes. A short squeeze? Yes. I don't like the risk reward here. You're buying at $5 and it's above that now. Maybe you can get a squeeze to 10 and the ADMA catches up to it. That'd be a nice move. It'd be a 100% move. But I think that you're risking being involved in the stock and it getting halted because there's a bankruptcy announcement and it opening up at 75 cents. So when you think about it like that, it's a 1-to-1 risk reward ratio, and the potential of not being able to have a stop loss in. And I'm very worried about getting stuck in positions that are going to zero as I'm almost on my 1-year anniversary date of my 6-figure loss in SVB from when I got halted in it pre-market on that Friday morning and just ate the entire loss of the full value of the scalp trade that I was putting on, where I thought I was risking a couple $1,000 and and ended up being 100,000 plus. Yeah, I would just be cautious with it. I don't know. It could happen. And I'm reading the rest of what you're saying. That Save could drop from a $3.5 billion merger target to $660 million market cap in 3 days after the judge ruling. But this thing might actually be worthless. It might not be able to be a going concern without the merger. So be careful. From Kevin, through that open consolidation in the queues, how would you advise navigating those waters? If you take multiple chops but keep good risk, do you always walk away for the day, or are you constantly pushing into the close? I know you do more swinging now, but asking from a newer trader. Yeah, sure. So, what I'm looking to do here, I think you said from the beginning of the day, through the opening consolidation in the queues. I don't know. I'm not sure exactly where you're referencing, but if you caught the pivot low off the ADMA and the queues or the SPYs, and it works its way up, you cover your risk, you book a little bit more profit, and then I don't want to overly churn it. So I'm probably looking to trail some. I get stopped out of my trailing stop probably on this candle here when it breaks this low, and then I don't want to do a lot midday. If I don't get stopped out, then I continue to kind of press the name a little bit throughout the rest of the day into the close and then possibly swing it. If Save goes, does Frontier go along with it? Frontier's its own company, right? They're not associated with Save? With Spirit? Or does Spirit own Frontier? I really don't know. If it's part of Spirit, then they're both going under. If it's its own airline, then, it's got its own management and its own financials, so should be good for now. Gabriel on YouTube saying he's got a flight coming up with Spirit and hopes they don't go bankrupt before then. Hope so too. Frontier was in a bidding war with JetBlue to get saved. Yeah, so maybe they'll still find a buyer. I haven't overly followed the drama with Spirit, to be totally honest. I know that the court ruling happened. I don't know the specifics on why that happened. I don't know if that means that another, like, I don't, it doesn't, what am I trying to say? I didn't read the specifics of the court ruling or do any real research on it because I didn't care enough. It didn't look like, from the little bit that I saw, and somebody can probably correct me, that it wasn't an antitrust thing. I don't think. I think it was related to some other regulation. I don't know how you could not allow that merger to occur over antitrust when there's a dozen different airlines that are out there. Now, the other thing I don't know is whatever created that ruling that stopped this, does that prohibit anyone from being able to buy Spirit? Or could Frontier, if they were already in a bidding war originally with JetBlue to get them, could Frontier come in and try to buy them again? I don't know the answer to any of those questions. You guys got to do research on it if it interests you. 'Cause I don't know. From Gabriel, do you think putting a stop on the IWM on the first 30-minute lows is a bad idea? Was a bad plan for a swing? Not necessarily. No, you had this nice pivot here. We on the team here, it wasn't actually me, it was a couple of other people in the VTF, called out the long on this 5-minute bar here. Versus the pivot low. You had a hammer, you had like a 5-minute RDR, it was into equilibrium, it was into the 21 EMA, the TLT was moving higher at that time. I liked the call out a lot from whoever it was in the VTF that made it at that time. So I like the long versus this low, which also coincides with the 30-minute low. So I don't hate at all that you bought versus that low in the bounce. Always get your risk covered, though. Would be the only thing that I would say. Hopefully this bounce was enough where you could get your risk covered versus that low, and then you're getting stopped out. It's not a big deal. But yeah, it was definitely the relatively weak index. So I'm trying to remind myself when I'm trading the indices, because I've made this mistake in the past where I want to put a short on for one of the indices, and the NASDAQ is up the most, so I short it. You're probably better off not doing it that way. You're probably better off, shorting the relatively weak index and buying the relatively strong index when the setups are there. So if you like the IWM at that point, it's probably worth paying attention to what the Qs are doing at that time anyway, if they're so much stronger. But I definitely don't dislike your trade. So I appreciate the question. Dennis, you should be able to have access to them through t3live.com if you go into the education section of the portal. If you don't, contact your manager at T3, whoever brought you into the company, and they should be able to set you up with those training program classes. It's like 13 or 15 classes on a variety of topics. People give me good feedback on a couple of them in particular. The game planning one's a really good one. That's probably worth checking out. All right, gang. Looks like I got through all the questions. I got some shoveling to do. Have a great night, everybody. See you all tomorrow.